Hello everyone out there. This is Empire Crypto TV. Please be sure to subscribe to our channel, Empire Crypto TV. We bring you some educational series about the financial markets, crypto markets, Forex market, the stock markets, all together. Technical analysis, fundamental analysis, and so forth. But today, we are looking at a brief history lesson about Forex. How it came about, as you can see on my screen. How did we get here? How did we become, all of us, as speculators? But it started way back. So I'm going to just try and go way back, okay? And I'm going to just go so back that, as far back as the bartering system, okay? There was economics and exchanges, and of course there were exchanges before the foreign exchange occurred. People used to exchange with one another in the bartering system. Okay, if you had maybe tomatoes and I had maybe a chicken or a sheep, I'll exchange it back to you. So that was just a small and period that happened for a couple of hundred of years. And eventually people just realized and understood and developed into other systems as well, and committing themselves into a new way of dealing with one another. And it was necessary because people needed some way to weigh out their value. Then there were commodities as well. There was commodities exchanges, and all of these goods and commodities, they were so big and so large, so they needed a system that is a bit advanced, that will weigh the whole commodity, that will weigh the value of the goods that were being exchanged. And one of the way that was introduced, it was done through silver and gold coins. Okay, these are more of the modern coins. Okay, there were coin systems long ago, very old system. Okay, these kind of coins, maybe these ones are a bit still primitive. Okay, these ones are still recent, if I should say. There were much more primitive gold and silver coins that were introduced to weigh these goods and services, so that people can be able to exchange them. And as far back as it goes, people all over the world recognized gold and silver. So if you had gold or silver, it was valuable to them. And so, okay, well, this is the value of my rice, this is my value of these goods, and the value of whatever I had, and I would weigh it with gold and silver. And this is how it came about, with using some sort of money, if I should say, real money. It was gold and silver. But all of that, then gold was becoming too much of a burden. There were people who were carrying huge stacks of gold, and so people would put them into reserves, and put them into such reserves as this. So sometimes if you just had gold, if you had like good amounts of gold that you can store instead of small coins, then you would just go to a reserve, and these reserves eventually became banks, or became the banking system. And then they would give you a promissory note to say, okay, this is how much gold you have in your reserves. These are some of the oldest reserves that you must know, but these are recent reserves. But in the ancient times, obviously this is similar, but in the ancient times, or in the old times, this was the same way how they would keep people's gold, and when they store it, they would get what you call promissory notes, and these promissory notes eventually became our money today. Let me just show you the picture of some of these promissory notes. Some of them, they look like this. Some of them are these promissory notes. They look like a lot more like our current day money system. And then it was known as banknotes. These banknotes would represent the value or the amount of gold that was stored in their reserves, in their gold reserves in the bank. So sort of like some of these major banking reserves that you can find, cubes, huge cubes. I think they still here today. They still store valuable diamonds and other valuable commodities and other materials that are precious to people. Some of them would come as straight up tell you that this is a gold coin representing about 100 so much gold. Maybe that system I couldn't understand very well, but these are some of the promissory notes that were given in the early United States. But some of the most ancient promissory notes are still available on the museum, are still being displayed. But that was just a long time ago. And then after World War II, things changed. Came an organization called the International Monetary Fund. This organization here, we could say that they have sort of changed the world after World War II, and they were given the power for all monetary policies to change or dictate monetary policies all over the world. So this is a very, very powerful force that came about after World War II. It was, I think, 1945, after World War II. Then the IMF stepped into power, and they introduced that all currencies were going to be pegged to the dollar, and the dollar would be pegged to the gold, and which was $35 an ounce of gold back then. So that system existed for quite a while, and after some time, the International Monetary Fund, the IMF, once again stepped in through President Nixon, Richard Nixon, this man right here, who was the president of the United States back in 1973. Now, this was a game changer, okay? This guy here came out with a speech saying that the gold standard will be abandoned, which means now that the relationship between the gold and the dollar will be no more. The dollar would be the main exchanger, not the gold anymore. So the gold was abandoned, and that led to paper money to be printed more than there was gold. And this sort of created our present day inflation, or our present day monetary, some of the struggles that we have on the monetary system in the financial markets is because of inflation. Hence we have interest rates rising up because there's too much money being printed than there is gold reserved in the banks. So all over the world, the currencies were printing more and more money, exchanging it, and this caused the birth of Forex, if I should say, foreign exchange. But when it started, it was major banks that were exchanging to one another. Traders could exchange throughout the banks. Major banks only could exchange, but only until when the internet back in 1998, in 1994, the internet came about. In the computer system, the digital age was developing, and at its development, and people could reach out to each other. And in 1998, it was a boom for tech in terms of the internet. And when the internet was active, and people could exchange information, and now including currencies eventually. So that the revolution of technology as well played a major part in bringing about the foreign exchange, or the Forex market, and also the other markets, also the stock market, and now recently also the crypto market, which is extremely at a high level in terms of the exchange rate. Now there is $7 trillion of volume daily when you talk about Forex. 7 trillion, which is a lot of money. That is why a lot of people get so wealthy rich out of this market. It's because of these changes that were made over time. The gold standard being abandoned, it led into printing more money, and international countries could borrow money and exchange currencies to one another. And in the 90s, when the tech boom was brought about the computers, and the exchanges were much more prominent than ever. And now we are in this stage where now the internet is booming, and now we have exchanges. In 1998 particularly, if I should add, is that the currency trading system was introduced in the United States. The currency trading system was introduced in the 1998 in the United States, and that is why we see so much boom. And this is where we are now. People are more involved. Retail traders like you and me can get involved, not just the major banks. It was the major banks because there was not communications like the internet. The internet was not yet about, and it was not as excessive as it is right now. So the revolution of technology also led to the revolution of this market, which we know as Forex, and other markets as well. And the computers, as we know, they are very, very, very useful in the stock exchanges. They keep information, they keep data. Computers are like, you know, a major changer, major game changer to this industry. So that is why so much money is pumping up now in the currency trading. So that is just the history of it, of currency trading or the foreign exchange. And I could say that it all began with this man, the IMF, and the IMF using Richard Nixon to announced that the gold standard was going to be abandoned, and the dollar would be the exchanger currencies worldwide. All currencies now will be pegged against the dollar, and hence you see that the dollar is the world currencies as we see today. That's how powerful the dollar is. So the almighty dollar is the ruler now. Gold is no longer the exchanger currency. I think this is where, for me, the game changer is, personally speaking. So that is a bit of history of Forex. I hope you've learned a lot about this market, and just a little bit where it is, where it comes from. Yes, until next time, thank you very much for watching. Please be sure to subscribe to our channel and support the channel Empire Crypto TV. Until next time.